Guys, we are back, and something absolutely crazy has happened here in the last 24 hours. The markets are going back into full risk on mode. I will show you exactly from where this is driving right now and what we need to pay attention before we're gonna see a major pump here over the next coming weeks in the market. If you don't want to miss out on that, then let's go. Guys, thank you so much for tuning in here on this Friday. Sorry that I was yesterday not here. My plane was heavily delayed. I had like over an hour. I was over an hour delayed, and it was then just too late. I just wanted to sleep when I got back here. But today I'm back, and I'm gonna show you now a clip where so many people right now are sleeping at the wheel and not seeing the big picture, what's actually happening right now in the market. And I will show you hard proof that this is actually the case already, and that we are slowly going now into full risk on mode and can position ourselves accordingly to this. So yeah, let's rewatch this small clip here right now.
Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude,
So there you see what he said. So if you paid attention, close attention, he said the repo repurchasing that they're going in the first month, and that is today they're going to do it, $40 billion is what they're going to repurchase tonight. So yeah, it is tonight on the 13th. It's fast the 13th December when this is happening. This is basically the starting shot where we can start to look at more risk in the markets. And the markets have already reacted to that over the last couple of days, and I'm going to show you that here after everybody smash the like button, guys. Smash the like button, don't forget this. So let me show you. So not only has the DXY already reacted to that over the last 2 days since we had the Federal Reserve meeting, the FOMC meeting, as you can see here. On that FOMC meeting, we got that big drop to the downside that was also anticipated on the live stream just before it actually happened and mentioned. And then yesterday, the same thing again. We got here a nice continuation candle to almost the bottom side of 98 points, and from there we got a small bounce now. So any bounce back here to 99 points will be a rejection point with continuation to the downside. You're gonna see that here over the next coming weeks. So, but what was now one of the biggest indicators in the market that full risk on mode is actually coming back? And this is something that not many people know if they were not around since like 2019, 2020, even in 2021, actually 2018 already, 2018. So, and this is silver. Silver is going parabolic here already for, I think the last 2 weeks basically. Yeah, the last 2 weeks, but went here extreme parabolic over the last couple of days here once again. So every time when silver is going parabolic, this is a sign that the market is swinging back into full risk on mode, because risk on assets are higher in demand when silver is going up. This is just a rule of thumb and effect in the market. Something else that goes into that mix, because it's always a cocktail when the market goes into risk on, is that the 10-year Treasury constant maturity minus 3 months Treasury constant maturity bond also is going up here, consistently going up. So also here, when this 10-year Treasury is going up, that bond is going up, that is also a sign that risk on is back for risk on assets. The next step is the M2 money supply. I don't need to explain you this. M2 money supply is always, or for an extended period of time, not always, but for an extended period of time, already going up here. And the Bitcoin price has not catched up yet to the expansion of the M2 money supply, which eventually is always happening. Now, when we are looking at the Bitcoin chart, I pulled up a fractal here that played out between the 20th of July 2020 and the 21st October 2020, and I believe that Bitcoin right now is following that fractal. So if you look at this here closely, then you can see here that from this low point here, we more or less follow exactly this fractal here. So if we continue to do that, then by next week, we should hit around $100,000. Remember, these patterns, they're not 100% exactly playing out to the T, but they are often rhyming. So that means they're getting pretty close to it. So, and I see here Bitcoin scratching, according to this fractal, next week around, close or around the $100,000 mark. And when we are putting in here a horizontal level, then you see, according to this fractal, the next resistance is anyway at $99,770. Once we're breaking above $92,700, and according to that fractal, we will get pretty close to that line. And I believe that we are not only getting close to that line, we will break slightly above this with a wick, but then come back below that, and then come here one time lower. Do I believe that we come here back to like $82,000 to put in here a macro higher low? No, I don't believe that we are going that low. What I see more happening here is that you have to take this part of the fractal and move it up a little bit, so it will not end up in these low levels. You have to move it up a little bit. I believe that it will look more something like this here. So, but that is only concerning for the second part of the fractal. I think it will be a little bit more shallow than in the original fractal, because we just have way more money in the market than we had in 2020. There are institutions were not even officially buying yet at that point, and also a lot of institutional players in general, because they had no license to do so. So now it's a different ball game, and that's why I believe that this fractal overall will look the same, but just here this second part will be more shallow and more here around that region up here. And then you see here between January and February we should get a breakout here, and from there onwards you got a massive rally to the upside. And I still believe that that big rally is actually coming, with everything lining up right now for an absolute perfect storm for this to be happening here. So let me see. So now, something else that we need to pay attention to, and that's more a short-term, midterm outlook, and I'm going to explain this here in a second what it actually means, is the Bitfinex longs. So here the blue line are Bitfinex longs, and every single time when they hit here peak levels, the market bottomed out. Bitcoin bottomed out. You see that here, bottom, peak. Now here we are peak territory. This looks like a bottom. I have said this many, many times that this down here starts to look like a bottom. So to complete an organic and healthy bottom, you need to get here one more step to the downside at some point. But again, I believe that it will be more shallow than what the fractal is showing. And then you get here the continuation to the upside, because right now this looks not good. You know, so if you look it in a bearish way, then you see here a bear flag forming. You know, a bear flag with a target of like $70,000 more or less. You know, so I don't see this playing out in any way, shape, or form, and not the same with breaking below here this upward sloping trend line. You know, so sometimes you get here these bearish formations, and then they start to break to the upside and completely invalidate that bearish bias. So so when you take this here into confluence with the Bitfinex longs, then you know, okay, so maybe it goes here one more time a little bit lower, but then it's off to the races back to the upside. And this has here in the past never failed. You know, you see over here, also down here, bottom forming, then it start to go to the upside. So what you are basically waiting for now is that this is properly rolling over, because that means that price will expand to the upside. So and that's why you should start to position yourself here in the market right now. I'm not saying go full long now everything, you know, I say start building a position, you know, start nibbling a little bit left, right, and center for building positions. So and the most important thing is right now that you are level-headed and don't catch FOMO. So I trade personally here on Margex. I'm gonna build here a position, and I will start to do this now. So and actually the last trade that I had here, I got out of that with like $1,000 in profit. So now I'm gonna take here, let me actually take $10,000. I wanna take a $10,000 position here. $10,000, yeah, 25x, yeah. So that's good, don't need to show again. So there we go. So I set my limit order for my take profit at $99,700 currently. And that's where I'm gonna close this. I'm already slightly here in profit on this position. Nice. So why did I mention something about being level-headed and clear mindset in the market? Because if you sign up on Margex, guys, there will be tomorrow a new Telegram channel where you will have access to, if you sign up on Margex, where I will drop a lot of lessons about mindset. I have so many lessons about this from old programs that I had, and for companies where I taught them certain mindset things that are applicable to trading. I will drop every week another mindset video that is highly important when you're trading and can be applied to any area in your life. You know, so trust me when I tell you, mindset is 80% of the whole trading process. If you don't have the right mindset, you will never be successful in trading. And this is why I know for a fact that some traders that are selling courses, they have like 50 videos about mindset and they have like 20 videos about trading. You know, so that's now obviously highly exaggerated, but you get the point. You know, so I want you to have access to that knowledge too. The only thing that you need to do is sign up on Margex, send me your UID number on Telegram or to my mail, info@amcrypto.us, and yeah, better is actually Telegram or mail, and then we're gonna send you the link to that Margex channel. So again, there is a link in the description on the top side, directly on top, where you can sign up. And yeah, then tomorrow you're gonna get access to that channel, because Margex still needs to set this up, you know, the Telegram channel with their bot and everything. And then in the future you can just sign up there and enter the UID in the dedicated Telegram channel to get access to that channel. And it's not only mindset, we're also gonna drop signals there, guys. You know, so also trading signals will be there, but it is mainly more on the educational side to give you the knowledge that you need to succeed in today's market here. On the weekly chart, you see here that now the EMA ribbon starts to line up with the macro resistance area around the $100,000 area mark. which again adds merit to the fact that we're going to see here in the next 2 weeks a move into that area. So you need to understand this is acting as a magnet right now. So, and especially since we have moved here above the prior high from last week, the next logical move is to get up here into the lower end of the EMA ribbon. And I want to mention this again, that's why I believe that we are getting rejected, is simply to the fact that we would need to get above the midsection of the EMA ribbon, which is currently sitting at roughly $102,000. There is massive resistance around this area, and that will lead to a rejection back to the downside. Then we get some reaccumulation, building momentum, and then we break above that. And that might be just happening before we flip on the weekly chart here into an official downtrend. So where we twist the ribbon, and just before that, we're gonna get that break above, and then we're gonna get continuation. On the daily chart with our bump and run pattern, nothing has really changed here. We are still in a sideways chop situation. Here, there's nothing wrong with entering right now, you know. So you know here the entry from us over a trade to $103,000, $104,000 actually, $104,500. Nothing has really changed here. What you're waiting for is for that pump to the upside. I want to mention here, it is Friday, so we need to be a little bit careful here, because there is at some point coming the fake move, you know, and the fake move usually happens around 9-10 a.m. in the US, so that is like an hour to 2 hours away from now. So we need to be a little bit careful with this, but the initial pump here that I expect to be happening around that time, that is the move that I want to take advantage of here on MarchX right now. So that's why I have that trade open, and when I see that move happening, which could go back here to like $94,000 approximately, there I'm gonna place my stop loss here like a 93,700, something like this, because if we are seeing a move like this into the upside in the next coming hours, that is the fake weekend move, guys. You know, don't trust that move. You know, it will be the fake move, and then with a stop loss here above that resistance, doesn't matter anymore. You know, kick me out. I run away with the money over the weekend. All the other longs getting trapped over the weekend, coming back into that range, chopping sideways, and then on Monday they get fucked because they get liquidated, and then the market is turning around. You know. So that is like one of the scenarios that I'm seeing here for Bitcoin over the weekend. Just something that I wanted to mention on the side. Also here, this huge pennant that we formed is also lacking convincing strong move to the upside. We are just waiting to see that move happening. And it can happen today, it can happen over the weekend, can happen on Monday, but it is coming. It is coming. And that's why I'm starting to build slowly positions right now. So also here on the 4-hourly chart with the EMA ribbon, you see here clearly this downward sloping trend. This is the trend, and it needs to be broken here at $92,650, $92,700 approximately. And at the same time, this is also a bigger resistance cluster just above current price here in alignment with the downward sloping trend line. So the EMA ribbon is overall still in an uptrend, which is good, but contracting, which is not then on the other hand not a good sign, because if we get here one big swing to the downside, then that's it, you know. So then the EMA ribbon will remain to the downside and will see a flip once more into a downtrend, you know. So because right now we did not see here a massive expansion in the EMA ribbon like over here, where we went to the downside into a substantial downwards trend. So this wobbling around here, you know, so this is nothing, you know. We need to see expansion, something like this, to the upside. Here on the MDX Algo Scalp Gradients, here we are back into a dark purple phase, which is most of the time an early signal also for continuation to the upside. But also here you see the clear sell order block area that we are facing just above the price, you know. So this here we are like $100. Yeah, is it $100? Not even. It's like $50. We're trading $50 below that area, and that is causing Bitcoin to stall here and not to move higher, back to like $94,000, $95,000 currently. So, but if we can manage to stay here for another 3-4 hours, I can see Bitcoin pumping back here to like 94 and potentially even $95,000 here before we see this turning around. So also on WEEX, guys, I'm still running my trade here. I'm basically at break even, you know, like $300 here underwater on a, what is this, 100, oh, this is like a 500, it's like a $620,000 position. You know, you cannot basically say that I'm here running in a huge loss right now, you know, when I'm trading with like over 6.7 Bitcoin, you know, which is like almost $650,000 worth of position size here, and just wobbling around my entry, you know. So if you want to trade with me on WEEX, guys, also don't forget, link in the description below. You get $400 just for signing up there, binding your phone and your email address and downloading the app, and another $400 if you deposit $500, so total $800 if you use the link in the description below. Now the liquidation levels show you another reason why I believe that we are going up first to $94,000, because price is closer here to this liquidation level on the short side to liquidate this these over leveraged short positions that came too late to the party, and it would also signal a break above the 200 moving average. So, but again, because it's Friday, might be a fake move where people then ape into the market thinking, oh, this is the real break of the 200 moving average. They jump in, you know, everybody goes max long. They take out this position here. Maybe, like I said, we reach $95,000, and then it turns around slightly below the 200 moving average again, traps all these longs here. Monday comes down, and then continuation in direction of $100,000. So on the liquidation heat map, also here we're gonna have a look. Yeah, also here, move $94,720 might be the target. Down here at $89,000 is the majority of the most concentrated liquidity currently sitting, with $170 million roughly. But yeah, that level, again, that level looks not really attainable from a current standpoint. You know, something here like $90,500, I can see that over the weekend, you know, so that would be max pain for many long positions to get trapped in that range. But below $90,000, I think we are over that. You know, we are over that to go below $90,000, at least in the short term. Now on the 15-minute time frame, here will the fake move derive from, and that is most likely lining up with a breakout out of that symmetrical triangle or bull pennant, whatever you want to call that. So here, if you treat this as a bull pennant, then here that target would be $96,400, which I don't believe we're gonna reach. You know, so I think we're gonna stop before that, like 94,700, maybe 95,150, something like this. So, but regardless, even if we go here only to 94,700, the risk to reward ratio is 1 to 2 on this trade. You know, so it's still worth to take that trade, but you want to wait for a break here above $92,500. That is your entry, you know, based on a 50-minute time frame where you want to take this from. So now the question is, was it here on this one? No. Should you do that? And for this, I'm gonna have a quick look here. Let's see. Yeah, indicators are telling you that is a good area to take this trade from when we are breaking out here. So, and I believe the breakout is not far away. You know, we are talking here 2 hours max. Within the next 2 hours, I see this popping to the upside. And then the only question is how high we're gonna pop before this is gonna start to reverse back into lower levels. But something here close to that high from when was that? Yesterday? 2 days ago? Somewhere close to that high here seems to me pretty pretty manageable for the price. Now when we look at the Bitcoin dominance, can I actually see now again? Oh wait, that's why I don't see this. Whoa, so come on, go away. Let me do this here. This is crazy. Why can I not properly see this? Sorry guys, here's like, okay, that gives me an idea. Okay, so here, the Bitcoin dominance bounced yesterday back to the upside, but we are still here within that range, you know, so we are still in that range of 59 to 59.757 percent. Nothing has really changed here. We're still waiting. You know, we are waiting to getting here this proper break to the downside. We were close 3 days ago, and then it turned around. So, but regardless, once it's happening, it's gonna happen. So, and I see this in the worst case happening by the end of this month into the new year, you know, and that will be the convincing break that we are waiting for, where we are not coming back above that level. On the total free market cap, also here, we are basically in a waiting position for continuation to the upside. Here, what you want to see is a break of $880 billion. That would trigger that next leg above $900 billion. So also here, just a little bit more patience. Ethereum saw yesterday a sharp move to $3,126. Oh, sorry, $3,160 approximately. So here, that was not a really surprising move, to be fair. When I saw this happening, wait, this was Sunday. Yeah, so that was Thursday. Yeah, on Thursday. Yeah. So and then, yeah, but yesterday. Sorry guys, I'm again time confused. You know, so it happens sometimes. So yeah, I was not really surprised to see a move back here into that range, because we needed, after that move into this big resistance, a retest before we can get continuation. So this here is simple Elliott wave theory. Let me just get this here quick. Elliott wave. So yeah, 1, 2, 3, 4, and then here 5. So, or if you want a more bullish scenario, then here's your 1, here's your 2, and we start now 3. So and 3 will go much higher than 1, and then you have here your 4, and then here close to $4,000 you have your 5. It depends on how bullish you want to be on Ethereum. So I like it for now a little bit more conservatively, and I explain you why. So if this is accurate, then what's going to happen afterwards is that you're going to get a corrective wave, an ABC, something like this here. Yeah, like here. So and after that ABC, that is where you're going to get then another impulse wave to the upside. So here's your 2, then 3, you might go all the way up here before you get 4, and then you go up to here, past $4,000 for good. So this is, according to Elliott wave, for me the most likely outcome what's going to happen here with Ethereum in the short term. So and of course you can trade this, you know, when you can spot things like this, you can trade it really well. So if I'm right here and 4 was down here at $3,150 and we are up now $100 from there, which is not a lot, then you can on low leverage start building a position here on the 4-hourly chart, and you can increase the position when we are breaking this downward sloping trend line here. When you see this trend line to be broken at 3,000, what is this? Basically 1% up, $3,264. Then you can start to increase a little bit your position or leverage, and you can completely ape and when you break $3,400. So if we break it first lower to retest that low from yesterday, then even better, then you can go here a little bit heavier in position size from that level, because now we have confirmed that the underlying block here is again acting as strong support for Ethereum. For Solana, I think that we're going to see here in the short term a small rejection from that area here, because it's acting as resistance right now. Would I overall still take that trade setup that I have laid out here? I'm gonna let you know here in a moment. Let's see, daily. No. So I think there might be coming up a better entry for you guys, and that entry might be down here at $135. $135 all the way up there, and then let's move this all the way up here. So, and you want, yeah, so that's what you're looking for right now. So here, over the weekend, Solana pulled back 3%, then turn around next week to the upside, $150 because the indicators, the RSI and the MACD are still bullish, but the stochastic wants to turn around. So on the 4-hourly chart, the daily is looking similar. Yeah, and if there is not a break of $141 coming here in the next coming hours, then we are either continue to go sideways below that resistance area while the indicator is coming down, or you get a move to 135, and from there then next week a move past that massive resistance. Guys, that's it already for today's live stream here. My camera again turned off. I'm gonna order now that cable again that I need. I was actually looking downstairs if I can find this, and I could not find it, which is really, really annoying. And also something is going on here with my YouTube studio setup. I don't know what it is. It's really, really annoying. I need to check here a few things. Maybe YouTube did just change the layout, which would be also bad, but definitely I have to see what's going on here. But guys, thank you so much that you were here and tuned into this live stream. I will be back tomorrow, of course. Don't forget, smash the like button, hit the subscribe button, hit the notification bell. See you with more money tomorrow.